Unilever is one of the biggest companies in the world, and yet many people don't know who they are or what they do. But we guarantee that almost everyone has purchased at least one of their products. Does their global reach and huge product range make Unilever stock an essential part of every investor's portfolio?
Offering an amazing dividend that keeps getting bigger and a strong balance sheet, surely this is the stock of dreams. In this video, we're going to cover who Unilever are, analyse some of the basic fundamentals, and look into Unilever's future to establish whether this is a stock that you need to be investing in. Let's check it out. Welcome to MoneyUnshackled.com, the investing site that says you and your finances free. This is Andy, I'm Ben, and if you like what we say, be sure to hit the like button and click subscribe and check out our new website.
Also, if you want to support the channel and get rich in the process, then check out some of the links in the description below where we've listed loads of cool stuff that will help you become financially free, including up to £100 cashback if you sign up to one of the peer-to-peer platforms. Let's get into the video.
Who are Unilever? Unilever are one of the companies that we featured in our very popular video, Best Dividend Stocks UK, which we'll link to in the description below in case you're interested in checking it out. The company is a colossus with a whopping market cap of £127 billion, which was up from £109 billion at the time of our previous video. That's some amazing growth in such a short period of time.
Next time you're in a supermarket or even just look in your cupboards and check out the manufacturer of those products, we bet you that the majority of those are from a small number of companies, Unilever being one of them. In fact, according to Unilever, 7 in every 10 households around the world contain at least one Unilever product.
They own over 400 brands, and 13 of these have sales of over €1 billion each. Let's take a quick look at some of these. Do they look familiar?
We love this company because brands, and lots of them, create a protective moat which makes it very difficult for competitors to enter the market. A protective moat is a key thing legendary investor Warren Buffett looks for when investing, and consumers tend to have loyalty with their favourite brands and keep coming back.
Not only does this give Unilever a more predictable income stream, but it also means that they can charge higher prices, often a lot higher. Take Domestos. Supermarkets tend to charge about £1 for a bottle, but the non-branded supermarket version is around 45 pence for essentially the same product. This is a whole lot of extra margin for Unilever.
They are also hugely diversified in terms of geographical reach, with exposure to markets all around the world, with particular exposure to emerging economies. It is these countries where large growth is expected to come from. In fact, if we look at this snippet from their latest accounts, we can see that almost half of their revenues come from this area. Strong brands across many geographical markets make it less risky for investors. Perhaps. Remember, as an investor, you're looking to stack the odds in your favour.
Dividend and yield. The dividend yield is certainly not the highest in the FTSE 100, but is still decent at 2.8% and has a healthy dividend cover of 1.52.
A rising dividend with healthy cover is exactly what you want to look for when constructing a dividend portfolio. Unilever even pay out the dividend on a consistent quarterly basis, which is great for your cash flow. Bear in mind that Unilever now decides dividends in euros, so while the dividend is consistently rising in euro terms, UK investors will see a level of volatility due to currency exchange rates.
Share price. Just look at that share price growth on top of any dividend payouts. Whilst a chart like this is historical and not necessarily an indicator of the future, it goes to show that performance has been good.
Whilst your investment style would dictate whether this is good or bad, we tend to like the consistent growth. Stocks that show sharp drops may look like opportunities, but it is far too common to get stung again as further drops often occur. I should know, as I've been stung a few times myself.
Earnings. We find that the best place to go for companies' information is the company's accounts. Investment websites are good, but unfortunately can contain errors. Companies' accounts are, however, extremely long, extremely complicated, and extremely boring.
Here we see that revenue has hovered around the €50 billion mark for the past 3 years, but despite this, they have managed to grow net profit and earnings per share. Bear in mind that we see a huge surge in non-underlying items. By following the notes, you can find that this relates to the disposal of its spreads business. These sort of gains are one-offs and should be treated as such when analysing stocks.
Whilst a full analysis of earnings goes beyond the scope of this video, we are happy with the earnings of this company.
Price-earnings ratio. According to the Hargreaves Lansdown website, the PE ratio is 19.8, which is based on the adjusted earnings per share. This is excluding non-recurring items, which we assume to be things like the disposal of the spreads business that we just discussed.
This is high when compared to the FTSE 100 average PE of 15, but we think that Unilever definitely has better protection from price drops and is better placed for growth.
Risks. Unilever relies on the power of its brands, and they need to ensure that those brands stay relevant. Changing consumer demands and even new taxes such as the sugar tax can have a huge detrimental impact on Unilever's profits.
And then there is a problem with plastic packaging. Unilever needs to find a way to reduce its reliance on plastic. Customers are becoming more concerned with the environment and are beginning to avoid products that unnecessarily damage the environment. There is also taxes and fines that will damage profitability if they don't act on this now.
Question of the day, do you like the look of Unilever shares and will you be investing? Let us know your opinion in the comment section. Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.